All right, so at this point, we're stepping it up. In the next few lessons, we're going to be focusing on price action patterns. Price action patterns are some of the most important things that you need to know to become a technical analyst trader, to actually look at the chart, break it down, and figure out whether it's reversing, whether it's continuing in the current direction or whatnot. Price action patterns, there's continuation patterns and there's reversal patterns. But the one thing that we need to know is that there are many different types of price action patterns, and we're going to be covering them all. Everything from descending triangles to ascending triangles, to falling wedges and rising wedges, double bottoms and double tops, flags, head and shoulder patterns, inverse head and shoulder patterns. So over the next few lessons, we're going to be breaking down every single one of them with many examples and so on. I'm going to draw on the charts a little bit as well to show you exactly what those patterns mean and which ones are reversal patterns, which one are continuation patterns, and so on. Now, the things to know about price action patterns in general is think about a trending market. When the market is trending downwards, as an example, when you think about that concept, the trending market, it means that, assuming it's bearish, it means that there's a lot of sellers in the market, right? So they're selling, and price action is just going lower and lower and lower and lower as there's majority of sellers in the market, right? Hence why we have a bearish trend, because majority of the people are actually selling. And if we have a bullish trend, majority of the people are actually buying. However, whenever we approach a very strong support or resistance level, whether it's the 50 EMA or a horizontal support and resistance level or whatnot, whenever we approach a major support and resistance level, at that point, we go from majority sellers to eventually buyers starting to come into the market. And at the same time, we have sellers, and at the same time, we have buyers, simply because there's a strong level and people are trying to buy and push price up, right? And this mixture between the sellers and the buyers is what actually creates these price action patterns, which we're actually going to be focusing on. And those price action patterns actually cause deceleration in the market. So we looked at a little bit about deceleration and consolidation. We're going to continue to be looking at deceleration and consolidation. That typically develops some kind of price action pattern, whether it's a wedge or a triangle, a head and shoulder pattern or whatnot. And these patterns happen all the time. Whenever we approach a major level, typically there's some kind of pattern that develops that tells us the price action is decelerating and potentially it might be reversing. So they're extremely important. We need to understand them, and I'm going to spend the next few lessons actually breaking them down. So that's it for this intro. I'm just letting you know this is going to be a very important part of this masterclass. And again, it's something that we're going to be building up onto as we progress through this entire masterclass. So that's it for this quick intro. In the next lesson, we're going to be looking at triangles and wedges. See you guys there.